Welcome back. In this week's Global Economic Week ahead, U.S. tech earnings, the ECB's monetary policy decision and tariff negotiations are in the spotlight. Investors are eagerly waiting to see the economic dynamics of different nations as U.S. tariff policies exacerbate uncertainty in the global market. And joining us for a look ahead is Naeem Aslam, CIO for Zaye Capital Markets. Thank you so much for your time, Naeem. Let's actually start off with the U.S. tech earnings. I mean, we've seen just even the bank earnings that topped analyst estimates last week, boosting those U.S. markets, which are trading at record highs or near record highs. And of course, now we are waiting the tech earnings, a mixed picture from the chip makers. So Alphabet and Tesla. What can we expect from them, do you think? And I'm sure this might also have diverging opinions, considering, how much investors punt, or not even punt, actually, how confident they are in Alphabet, but also how unconfident people are on the Tesla CEO.
Yeah, thanks for having me. The reason that really brought a smile to my face when you talked about how uncomfortable or maybe investors may be on the edge when it comes to Tesla is because we are talking about the biggest fight between billionaires, right?
Yeah.
Donald Trump and Elon Musk, and how everything is very much circled with that one. And then people are talking about how many different ways Donald Trump can really hurt Elon Musk and which particular companies are going to be on the forefront of that. Look, I get that. And I think I'm happy to digest all of these particular elements as a volatility, when volatility comes. But that is not shaking me off from Tesla stock. Because going into the earnings, I'm going to, because your question has so many different questions, so we will break it down in piece by piece. So in this one, when it comes to Tesla stock, right, I am not too much worried about what is going to be, because we're going to see some issues in terms of our deliveries. We're going to see some issues in relation to how demand is being taken away by other competitors. Yeah. And I'm okay, like I said, as an investor, I'm okay to digest all those particular factors, because I am not in this particular stock for the short run. I'm looking at the long-term equation. So for the long-term equation, what is there that is keeping me in this particular stock, despite the fact that we may see really not great earnings, and despite the fact that Elon Musk is like a time bomb, which, you never know what the next tweet is going to be, despite the fact that Donald Trump and Elon Musk are not getting along, and then he's launched a new party. The thing that is still keeping me in Tesla is the AI element of that one. How much data Tesla is really sitting on, how advanced that particular Grok 4 version and the Grok heavy versions are, which they are going to implement in Tesla. It is the fact that the Tesla still owns the strongest battery power within particular S1, and not to mention the driverless taxi, the robo-taxi. Because when you are speaking of Uber, yes, we heard that, they are investing in Lucid, the competitor to this one, where Elon Musk used to laugh about. But look at the amount of a production of cars that Lucid is going to bring on the market. Compare that to the amount of a production of a robo-taxi cars that Elon Musk is bringing on the market. And then when you are talking about the robo-taxi becoming global, global thing in terms of Uber, the future is absolutely humongous. Now, within that one, you have those robots, the humanoids, which Tesla owns. So again, I'm not looking at short term. In the short term, anything which are in relation to that, I'm happy to digest that. I'm happy to have a few bruises on my face because of those particular one. But the long term, I know, as long as the legs are strong in this particular boxing fight, I'm going to be able to stand strong, because the long-term goal is pretty good. Now, what is beyond this one? Beyond Tesla, because Tesla is not the only heavy hitter which is going to hit the market. As you mentioned, last week we had the bank earnings, and then most of them been able to beat the expectations. With the banks, volatility, they live on volatility. When the volatility hits the market, earnings for those particular banks, the PE ratio, for everything else is going to hit pretty good on that particular aspect. But with tech earnings, it is more about which way the trade tariffs are moving, how that is going to impact my margin, and how I'm going to digest that particular news, what is going to come after that in terms of my capex investment. So with tech, so far looking at it, everything seems to be still very much sailing in a calm sea. Yes, every now and then we get that particular news. The reason for that, it appears that the bark is not like the bite is not as worse as the bark.
Okay.
That is what we are looking at. He says something else, the president, but he does something else. So it looks like that, you know what, we are going to see some sort of a tariffs coming back, but there's going to be nowhere close enough to 100% to 300% and everything in relation to that. And the fact that NVIDIA has been able to bypass, lobby, whatever you wanted to call it, and has been able to come back and then sell its mega chips, its most important H2 chips, back to China, is very much giving that okay, you know what? This is just a trade tactics.
Yeah.
Yes, there would be something, but the market is still open. On top of that, we don't know what we're going to get tomorrow when the Federal Reserve chairman is going to speak, because the rumors are where we sit, we could be hearing a resignation in that particular speech. Imagine if that hits. If it does, we've got to come back and talk about that.
It's actually quite interesting that, and you're right, the bite isn't as bad as the bark, because even with this hard deadline now, this narrative of a hard deadline on the 1st of August, they're still saying that it still doesn't stop countries from negotiating even after that date. Well, let's get on to monetary policy. We do have a speech from Jerome Powell coming tomorrow, of course, that Fed meeting next week. But I'm sure maybe at this point, more of the focus is on the ECB and particularly the wording that they might use in terms of how they could respond to tariffs?
Yes, so this is just going to be nothing but just a lip service.
Okay.
We know that ECB is not going to reduce the rate any further. They are very much sitting and flirting with the baseline scenario, which they have in relation to that. So the room to the downside is a minimalistic right now. So it is, we are talking about a federal, the ECB chair, the European Central Bank coming and then just providing a lip service and then nothing else. So I think we're not going to see major firecrackers at this particular event. No major movement in the euro in terms of a weakness coming in. The path of the least resistance really depends on the strength of the dollar and then what will happen to the dollar. In terms of the European markets, I think there's already quite enough optimism which is driving these particular markets higher, and then I think that trend is likely to continue. So the path of least resistance is further grind to the upside.
Okay, Naeem, we could talk for an hour because there's so much going on, but we do have to wrap up the conversation. They really, really appreciate your time and your insights today. That was Naeem Aslam, CIO for Zaye Capital Markets, with the Global Economic Week ahead.